Hey, everybody, Tom Gentile. Welcome to Monday, March 27th, April 27th, 2020. Glad to have you here with me today for another Monday morning midday report. So, got a lot on tap for you today. Right off the bat, checking the news over the weekend, obviously we had some pretty good news that New York had its first day in over a month where their death toll from COVID-19 dropped to some very low levels. They're talking about reopening parts of the city. I look at what happened last week where we had bad news, and that just equaled higher prices. And I'm just wondering if this bit of good news might turn that around. It doesn't seem so yet for today. But the other big thing we have going on this week is we've got a lot of big earnings on tap. And I think that's going to set the tone really for the end of this month and going into February. So I've got a lot to cover with you guys. Let's get started. All right. So let's pop on over and let me share a screen with you real quick. And so looking good here. As we move into the day, I am going to pop over and kind of give you an idea, an overview of what I want to cover over the next half hour. So we're going to look at daily and intraday market averages, and that's going to be everything that I typically look at each week. We'll look at stocks on my radar this week. And so what I'm going to be doing is I'm going to be looking through high-low projections, and I'm also going to look at the cheapest and most expensive options that are out there, using the IV implied volatilities that I look at and that I store using my software at Tom's Option Tools. Oil drops again. All right, so let's take a look at some new projections for oil and what I expect is going to be happening once they do the reverse split with OIH. So we'll talk about that. Maybe we'll go through the reverse split one more time for those of you that may have missed that. All right, so let's go ahead and get rolling here. Let's slide this way. So I'm going to log in, and I am going to go to our stocks, charts, and stock charts. And so I thought about, starting off with SPY as we always do, and I could go to, let's go to my stock list, because I believe I have all that. No, I've made some changes on my stock list. Okay, so let's start with SPY. And this is the chart I've been showing everyone in here, which is the chart of I've got candles, and then I've also got this red line running through here, and this is basically our options implied volatility, basically what option traders believe the ranges are likely to be as we move through the chart. And you can see here, back in February, not a lot of movement. In March, they projected huge movement as the stock market dropped. That's come back. Look how far we've come back just in the last month, all right? I mean, it was literally a little more than a month ago when we were sitting on highs that I had not seen in years, right? And we pulled back. Now we're back to 30. 30 is still high. But do you realize if we get down another 10 points, that we're back in the ranges that were happening when the stock market was up here in the threes, right? 330 to 340 we were seeing. And then even a little pullback that got us into 320. We were seeing ranges that were up here near 20, right? So we're on our way down, it seems like. But I think that there's that everyone's kind of waiting with bated breath right now with the earnings that are coming out this week. And we're talking about Amazon, Google, Apple, Facebook, Tesla. Those are the big five, all right? Those are the big five. And what I thought I would also do is take a look at those. Take a look at those stocks. And I typically don't look at individual stocks simply because I'm more interested in stocks, in looking at systems and strategies and it telling me what stocks to be looking at. But because these are so important, all right, Amazon, Apple, Facebook, Google, and Tesla, we're going to look at each of those charts as well. All right. So stocks on the radar. And the reason they're on the radar is because of earnings coming out. But I want to show you what they look like with their implied volatility And let's kind of get an idea of what the options look like in those charts as well. S&P continues to kind of bop around this area of resistance. And I don't, the way we get above this is if Apple, Amazon, Facebook, Google, and Tesla all report better than expected earnings. And they got to be much better because all the earnings have been revised downward for most companies. If they do that, then we jump up, and I think we go up here closer to the 300 area. Okay. So TLT. Now, if the stock market's up, where is TLT looking? Well, TLT is looking down. You can see the red candle that came in as well. But TLT too has an area that is interesting. You see the red line. This is the applied volatility. This thing was trading down around 10, got as high as, well, close to 65. Look where we are right now. We're back down in the low 20s. But TLT has been moving higher, and it's due for a little bit of a pullback. But higher lows and higher highs suggest that traders really do want to stick with bonds for now. All right. UUP, this is the double dollar index. And as I've been talking about here, we've gone from this range of 25 half, 26 half to now 26 half, 27 half. And we're trading right around the $27.11 area. This opened lower this morning, but it's been kicking a little bit higher. Still lower than Friday's close, but well off the lows of the day, as I can tell from that green candle. All right. What else has happened is you look at the implied volatilities, and the US dollar has gone from an IV of down here near 5, okay, to a high of 75, back down to an IV that's sitting right around 10. So it's very, very close to the lows that were occurring back in February, right? Again, I believe this stays firm, and it stays in the 26 half, 27 half range. And you know, what's going to make it break out of that? Well, if we break out above 27 half, that means the stock market's down. All right. If we break down below 26 half, that means we're back. We're heading back in the direction of 3,000 S&P. Okay. Finally, USO. And we're going to end on USO later today, but look at this. This is just amazing, isn't it? I can tell you exactly why USO is doing what it's doing here. Because, and I believe I mentioned this on Friday, but if I didn't, shame on me. All right. Here's the thing. I noticed when I logged into my brokerage account last week that I was getting flashy signals at the top that crude oil traders were only allowed to close positions now in the June and July contract. So what's happening is the futures exchanges are forcing people not to go in and take the opposite end of a trade and open positions in the June contracts or July contracts. And usually when you're forced to do something, most people don't like that. All right. Enforcing or almost, it's not price fixing, but it's really close, is typically not going to work. And that's why you see these contracts down big today. And we'll get in and look at the intradays here momentarily. But that's what's kind of happening with USO, is that because traders are only allowed to buy the August contracts or greater to expiration, that's what's causing the problem with oil today and USO. You know, the weekend I saw on Bloomberg where the Saudis were already cutting back production. Why isn't this coming into and affecting USO and the oil markets in a more positive manner? I'll tell you why. Again, because we're being forced out of the June and July contracts. The only thing you can do is close positions there. And anyone who's long those positions, if they have to close them, they got to sell. And if you got nobody taking the other side of that trade, what's going to happen to the price? It's going to drop, and that's exactly what's happening. Okay, last, let's look at GLD. All right, so GLD is having a pullback day. All right, we came up again very close to the all-time highs. This was on Thursday and Friday. We're getting a pullback. We did pull back considerably more. We've come back off those lows. which were lower lows today than they were on Friday, but we are off those lows and bouncing a bit, but still down pretty hard from the 162.5 range that we were trading at on Friday. Okay, I still think this is the safest place to be as we continue to see more dollars pumped into the U.S. economy. I think this is going to be the area where we're going to run into some interesting situations. We'll get a little bit of pullbacks here and there, but I like gold to the long side as a long-term trade. All right, let's take a look at the almost FANG is what I'm going to call it. Almost FANG is Apple, Amazon, Google, Facebook, but we're throwing Tesla in there because that's the big one that everyone's got on their radar this week as well. Let's start with Apple, AAPL. We might see some change here, a little bit of different change. So Apple did have about a 25 IV coming into February when the stock was trading up around 330. Stock went from 330 to 220. Isn't that interesting? The SPY was also at 330, and the SPY also went down to 220. And now the SPY is just around around the 280 area, and so is Apple. Apple stock looks like the SPY, literally. Now, also, I want to show you that the IV. Now, the IV on Apple was trading around down here around just above 20. It went as high as about 115 before pulling back and is now trading just above 45. Now, that uptick today, that's a little bit different than what's going on in the overall markets. Apple's upticking because it's got earnings coming up, and I'm expecting that uptick's going to continue as we get closer to the earnings, which are scheduled to come out in 3 days. All right. Amazon. Let's take a look at Amazon's chart. You can see here Amazon is making new all-time highs. We opened higher, have pulled back since, but also I want you to look at something on the red line. So the red line back at the beginning of the year was trading all the way down here at 15. These options were very cheap. All right, when we came into mid-February, they were trading just around 20, still very cheap. All right, went as high as 80 as Amazon went from around the 20, let's call it 2150 on average, dropped all the way back to 1650. Look where we are now because they have become such a necessary company. This stock has risen and soared up to the 2400 level. I can tell you right now, going into earnings, which are also in 3 days, I am more than likely going to take a bearish stance on this company because it has gone from the 1600s to the 2400s. Stock's gone up 50%, almost 50% in value in a little more than a month. All right. I don't believe that any kind of earnings that they come out with are going to be able to match the stock price. And I do think that we could see a short-term pullback in Amazon before or as we go through earnings. So if earnings are estimated on 4:30, that's a Thursday. That's going to be after market close. So potentially that could be a one-day trade that happens there with Amazon. And I'm going to share more of that with you on Thursday of what exactly I'm looking to do. All right. So that's Amazon. Finally, let's see. We looked at, I'm not there yet. I got 3 more to go. Facebook. I looked at F for Facebook and said, finally, wrong thing to do. Facebook, 220-ish on the highs back in January. February's high when the market was hitting all-time highs was just below 220. They went from 220 down to below 140 a share, have been moving back. Again, here's another one that's gone from 140 back up to and now trading at 193.05 as they're coming into earnings in 2 days. All right, what do you feel their earnings are going to be? I think they're going to be on the soft side too. All right, but here's the thing I want to show you. Let me zoom in. Take a look at this area right here. All right, the implied volatility. The option traders are already on the move as just a couple weeks ago, Facebook's options implied volatility was around a 40. Now it's trading at 60. So basically what's happening is their time value in their options roughly has gone up by 50%. just in the last couple weeks. All right. This is going to continue to rise into earnings, and then it will get crushed because that's what happens as a stock faces its earnings. All right. Two more. Google. Update Google. Now, Google too has gone from over $1,500 a share down to just above 1,000, and has come back to around the 1250. I'm sorry, 1280 area, 1284 to be exact. All right. Implied volatilities, option traders were calm in February as we traded below 20. They got excited when the market dropped, and the options implied volatility for Google was trading up above 90. Now it's trading at 50. But 2 weeks ago, we were at 40. So it's risen a little bit, and that'll continue to rise into earnings, which are going to be tomorrow after the market close. We'll hear about what Google has to say for their earnings. All right. So we'll come back, and what I want to do is I want to look at, as I'm looking at these, we had Amazon on Thursday. All right. We have Apple on what was Apple's earnings report? Let's take a look again. And these are all estimated, so they are subject to change. Apple's also on Thursday. Facebook was on Wednesday. Google is tomorrow after the close. Tesla, TSLA. And let's take a look at Tesla. Tesla's earnings are coming out in 2 days. So that's going to be Wednesday after the close on the 29th. And you're looking at another one where Tesla had ran up, and this thing got on fire back at the beginning of at the end of January, as you all well know, where within a week we went from trading around $600 a share up to almost 1,000 before pulling back. Then it made another run up to 950, and we pulled all the way back to 350. Where are we at right now? Back on a tear again. We are hitting $790 a share, hit a high of almost 800 earlier this morning, had a little bit of a pullback, but keep in mind, earnings are coming up, and that is being reflected in the red line that you see here of what's been happening just in the last couple of weeks. All right. So that's Amazon, Apple, Facebook, Google, Tesla, and the one we want to be concerned about right now, and I'm going to take you right back to it, is Google. Googl. All right. Why Google? Because Google is the first one up to report earnings, and that'll be tomorrow after market close. So you guys see this right here. And I'm going to be looking at all of these. I'm going to be looking to trade some sort of a low risk bearish opportunity with all of these. So again, and the reason why, because the implied volatilities are still very high. I also believe that all of these made run-ups from the March lows that are suggesting that their earnings are going to be at or better than expectations. And so I'm going to look at those a little bit more intently as we go into the rest of the week. And I'm happy to offer up some ideas through the week on how I plan on trading these. All right. Other areas we could go to is I'm actually going to go into my option rankers. All right. So first we'll go into stock rankers. If you want to see what's really, the best in breed and worst in breed, take a look at, I'm going to look at the penny. This is a list of the top 300 stocks that I like to look at. Last 52 weeks, here's the ones that are, on the high side, the top 5. Shopify, DocuSign, Teladoc, Digital Realty Trust, Eli Lilly, all hitting fresh highs for the year. Not just this year, but the last 52 weeks. And if you want to look at the ones that are very close, Novo Nordisk is up there, Johnson & Johnson. The S&P Biotech Fund is also up there. All right. GDX, the gold miners ETF, and then Newmont Mining rounds out the top 10. When you look over here on the far right-hand side, you can see these are close minus low versus high minus low to put them in a range. And these are trading very, very close to the top of their one-year ranges. Now, if I flip this upside down and we look at the stocks on the lowest, actually, you know what? We don't even have to do that. I just have to roll us all the way down, and we can see what is just tearing it up to the downside. Southwest Airlines down here on some fresh lows, right? The ProShares Ultra Shorts are down here on the lows. Arch Capital, Simon Property, and I see a couple iShares on here, Western Union, Wells Fargo. And so I brought those two because they're at the bottom 10% of their lows for the year. Couple of banks, couple of property groups, a capital group, and of course, Southwest Airlines are all stuff at the very, very bottom. And it's my belief, looking at the charts and looking at the payoff charts using our options applied volatility, that all of these are still short-term bearish. Whether they're long-term bullish or not really depends on their cash flow, and are they going to have some sort of long-term projections and long-term plan to get out of the crap that they're in right now. Okay. So we've talked about stocks, bonds, currencies, commodities. We looked at what I've got on the list right now. Let's go look at the intradays, and then I want to talk about oil a little bit as we round out our session for the half hour today. So if I slide on over here and get an idea what's going on, the stock market is moving up in anticipation of positive earnings. That's why you see the things like SPY, DIA, QQQ, all sitting in the green right now. Okay, so these are all in the green. And if you look over to TLT, and let me mention this once again, first hour highs, 286.29, first hour low, 284.62. So a pretty wide range here for S&P, for the S&P. All right. You look at bonds are near their or off their lows of the hour, which is actually telling us that the stock market does want to stay on the high side as of right now. All right. Also supporting that is the U.S. dollar. Although it has been lower on the day, it is still in its range between its first hour high and first hour low. And then USO down another almost 16% today. And that's the one I want to focus on a little bit more with you. So we're going to double up here with our charts. And I'm going to put USO over here on the left-hand side because that's what we're looking at here right now as we're down near 16%. I want to show you a couple of things. Dash CL. So this is crude oil. Right? This is crude oil for the month of June. Okay, that's the front month right now. It's trading, and this was 6:30 in the morning. We were trading at 14. All right, let me back it up a little bit more. This was Friday, up here in the 17 area. Here we are right now at 12. This is down now 27% on the day, and so you can see that between Sunday evening, Monday morning, and where we are right now, we've had just continued sell-off in oil. And again, if you look here, why is USO down? Because the front month of oil is down so much. And then if you really want to go out and look at even more of these, so the front month is the M contract. The N contract, and this is CLN20, this is the July contract. It's down 14.89%, probably very close to what USO is doing. So USO moved out of June. The managers moved themselves out of a lot of the June contracts. They stuck themselves in July and August. All right. Now, that was probably a smart move thinking about last week. But when the exchanges decided that they were only going to accept closing positions in the July month, that's what's hurting USO today. And if you look at August, which is CLQ20, and you'll see CLQ20, that's only down 10% for today, but still down nonetheless. All right. Now, how does this stack up against what I'm going to call the big three that we want to be concerned with? And the big three are OIH, CVX, and XOM. Let's look at each as it compared to USO. OIH. These are the holders. Now, the holders have been just tearing it up lately and moving off their lows. And if I were to take you, let's go to a 15-minute chart, just so I can show you the last, 30 minutes, so I can show you the last 10 days. All right, now remember, this one had a reverse split. So what it did was it went somewhere around the $5 mark, and it ran from just below 5 to up to around the 90-ish area, right? So this was a reverse split, quite a big reverse split, as you can see. But since then, what's happened is OIH has actually ran from the 80s up to 104, 104.76 on Friday, and then it kind of got pulled back. Right, there was a big buying binge in here, thinking that oil holding companies were going to benefit from the drop in crude, but that would be a short-term benefit only. So as you can see here, Friday to Monday, we've gone from 104.76 down to 93, down another 3.5% today. So is the OIH fund, all right, that exchange traded fund, going to start trading more with oil? And I believe the answer is yes. All right, next, CVX. This is Chevron. Now, Chevron, if you take a look at what's gone on in its last in the last 10 days, it had a low down here at $78.81. Now, remember, this is when oil was, making that big move last week. So we had a pop up to 88 and then instantly back down into the high 70s. Where are we at right now? Back up to around the $87.17 area. So I said this last week, I'll say it again. If you like oil, go with an oil company. All right, go with an oil company. And then finally, let's take a look at ExxonMobil / everything else. This is one that was down in the low 38s last week when oil was dropping off like crazy. And then it was decided that they were going to fare pretty well in this, especially big oil companies like Chevron and Exxon. The one thing that they have that is going to help them is that there are going to be small to medium-sized oil companies that if they're not already bankrupt, they're going to be bankrupt real soon. And so that's going to give Exxon less competition and possibly some interesting buyout opportunities where they're going to be able to pick up some interesting acquisitions at a song. All right, 38, 44 was the high, 42 was this morning's opening, and now coming right back as ExxonMobil is viewed favorably. So in the oil industry, it's good to be a big player. All right, being a BP makes a lot of sense in a sector like the energy sector, which is really just hurting so bad right now. All right, so again, guys, we're not out of the woods here yet, and I think that this week is going to be a very interesting week for us as we move through what I think is the biggest earnings week of the season. All right, when you're seeing the Amazons, Apples, Facebooks, Googles, and Teslas of the world reporting. All right, so I want to make sure that as I'm going through and I'm creating trades, whether they're in these 5 that have earnings this week or anything else out there, we want to make sure we take less risk in our current strategies. We look at what's going up in a down market. We exploit volatility with options. Doing all 3 of those at the same time makes a lot of sense. Okay, and that's what I'm going to be proposing to you, not only this week, not only last month, but as we go forward. All right, so later this week, I want to review the biggest fast food chains. I promised I was going to do that with you last week, but I wanted to look at earnings. So we're going to look at McDonald's. We're going to look at Burger King. I've also got some rules-based trading strategies that I like to talk about later in the week. And if I'm going to get to some of these. If I don't get to all of them, then guess what? Then I'm going to be around a little bit longer than I thought I was, as we will go through another full week next week as well. So that's my plan. I want to make sure I get through all of this with you later in the week. And for that, I want to thank you for joining me again today. Yes, I will get to later in the week any of your comments or questions that come up. It's just that today is one of those days where I wanted to make sure that I got all this information out during my allotted time. All right, guys. So, hey, thanks again. I want to thank you for joining me today. Come back again tomorrow, same time, same channel, and we're going to get a little bit more detailed. We don't have to look at a lot of the weekly stuff. Looking at the long-term projections, those are now out of the way. So we're going to get short-term projections. We're going to talk about McDonald's. We're going to talk about Burger King. We're going to get into some rules-based trading strategies, and I will talk about channeling systems this week. I will talk about seasonality, all right, finding the best time frames to buy and sell any stock based on its seasonality, based on what happens during, for instance, the end of April, going into the month of May, etc. All right. Hey, guys, thanks a lot for joining me. I'll see you again, same time, same channel tomorrow. Bye now.